Now, I'm a guy on the internet. You shouldn't listen to me for advice. This is for entertainment purposes only. Seek out a professional or a politician. Just before all the Wall Street bet stuff was kicking off, another article about a politician and their recent trades was breaking. And it was about House Speaker Nancy Pelosi and what she did on the 22nd of the 12th, 2020. So about a month prior to filing this disclosure, she did a couple of trades. Now, I don't know whether she has a financial professional doing these trades or she does it herself. I assume that it's done by some sort of management, financier, some professional. But it's interesting to take a look at. So if you're new to investing, if you're new to trading, I'll break down what the strategy that Nancy has done or her asset manager has done, and we'll take it from there. Okay, I would just want to call out the first line item. Alliance Berenstein Holdings LP, and its ticker symbol is AB. Now, she bought 20,000 shares of this company, and if we take a look at the amount, it says between $500,000 to $1 million worth of shares. If you look at the rest of her investments, they're actually call options, and I'll talk about those in more detail later, and they're in companies that most people are familiar with. Apple, Tesla, and Walt Disney Company. And I asked myself, why did she buy calls for these companies but actual shares in this company? Maybe she's got a relationship with someone who runs this company, or maybe she's done a due diligence and she thought this was a good buy. Now, what I did is I looked up their dividends, and as you can see, their dividend yield is 7.25%. I think at the time when she purchased it, it would have been about 10%. So if you look at how much she purchased around the 22nd, it was $33.33. So let's open up the calculator and do $33.37 times, was it 20,000? Yep, 123. She bought $667,000 worth of shares. Now, at a 7% return on investment, that's about 46k a year, or about 60k if it was at the 11% when she bought in. So she's getting a significant amount of money. That's a decent wage for most people just because of that initial investment. I believe they're in the financial industry, they manage people's money, and they pay a dividend. Having 20,000 shares of the underlying stock, getting around about 69 cents per share per year, I believe. Let's have a look. Dividends. Dividend history. We see quarterly they get about 61 cents. So you're getting a significant amount when you multiply that by several thousand shares. So we do 69 cents times by 20,000. That's 13,000 per quarter. Just free money by investing in this company, essentially. So that's a good reason enough to buy into this. And you can see over time they've been pretty consistent paying their dividend. They've been doing it fairly regularly over the last 5 years. So I can see why you would want to invest in that. Now, the next set of investments that she went into were call options. Now, she bought 3 call options in companies that we all know. There's Apple, Tesla, and Walt Disney. Now, Disney has been impacted by the pandemic. It has had to close down its parks, and it got severely hit by the initial downtrend at the beginning of the pandemic. You see that they started off at $141 per share, and it plummeted to about 85. So you're looking at almost half of the stock price cratering. But they also launched Disney Plus this year, and based on their numbers, investors have been slowly buying back into Disney. Now, Disney used to pay dividends, but during the pandemic, they've put that on hold for now. But if you take a look at December, you see that there was a lot of volume and the price skyrocketed. And that was as a result of the earnings calls surrounding Disney Plus and how many subscribers they have. So the real strategy for Disney is getting this monthly income from subscribers to Disney Plus rather than just getting it when a movie comes out. It's a perpetual source of income for Disney, and you'll see many companies switch into this subscription model. Say, for example, Apple with its Apple One and products like that. If you look at how much she would have paid for Disney back on the 22nd, if she was to buy the shares, it would have been $170. Now, if you look over here, she actually bought 100 calls, and 100 calls is 100 times 100 shares. So you're looking at 10,000 shares, the equivalent of. Now, let's just open up the calculator again. And if she was to buy 10,000 shares at $170, she would have had to have put in $1.7 million into this transaction. $1.7 million is a lot of money. Now, if you take a look at what she actually put in, she put in anywhere between $500,000 and $1 million. And that's because she's buying the option, and she was buying the option in the money. So there's some intrinsic value already there in the stock, and it was well into the money as well. So that means as the stock price increases, she sees more of the profits if she was actually holding that underlying stock, if she was holding 10,000 shares. But instead, she's holding 100 calls. So this is a way to leverage actually the share price without actually holding the underlying stock. Let's take a look at the options profit calculator. And obviously the amount that it cost Nancy back in December is going to be slightly different to this. If you were to buy it today, it would approximately have cost you $838,000. Now, even at its share price right now today, you're seeing a profit of $51,000, which again is a significant amount of money for anybody to have. But let's say we saw that Disney went up 30%. So let's say it goes up 30% from here. 30% of 176 is about another $60. So let's say it goes to $132 in a year. You're looking at a return on that initial investment, an extra 50% on top of it. So she'll be selling this for 1.2 million, or it would expire at 1.2 million if it hits that share price. Now, if it goes to the moon and increases 100%, because everyone's so optimistic, they've got Disney Plus, the parks are open again, they've had record turnout because everyone's been frustrated with coronavirus, she will have earned 1.4 million, is that right? Yeah, 1.4 million on top of her initial investment. So she'd be getting about 2.2 million back if the share price doubled from where it was back in December. So that's incredible returns. Again, she doesn't hold the stocks, but because she holds these call options at such a low in the money price, the amount of growth potential that she has is extremely good on the upside. Obviously, if the stock price does go down even further, she will be set to lose money on her initial investment. So let's say if it stays around the price in a year's time, she will have lost $158,000, which may not be that big of a risk for her. I know that's a lot of money for some, but as you can see, it would only chip away only 20% of that. But she's got all this potential on the upside. Now, let's take a look at Tesla. So in the last year, it went up 479%. Now, is it going to do that for this year? Obviously, past performance doesn't necessarily equate to future performance. So let's take a look at the calculator. So she would have bought in at around $640. So she only bought 25 contracts. So if she was to buy this outright, 2,500 shares times around about 640, she will have had to have paid 1.6 million. But as you can see, she would have had to have paid between $500,000 and $1 million. And by today's prices, it would have been about $1 million. So let's say she was just under $1 million in order to buy these calls back in December. Now, Tesla's stock price right now, as of today, is 852. So let's have a look around here. She will have made from her initial investment of $1 million. She'll have made anywhere between $400,000 to $470,000 on that initial investment, and that was within 2 months. That's incredible. So if Tesla's stock price quadrupled, she's earning a lot of money. Even if it goes up at, say, 20% from now, let's say that's 1,200. Yeah, she's going to be making $800,000 from that initial investment. Now she's a Democrat, and the Democrats have got a plan to electrify a lot of vehicles. And you can see how Tesla would be part of that future, you know, whether if it's infrastructure, whether if it's the battery technology, whether if it's the vehicles, whether if it's the semi-trucks that are going to be deployed on the roads. It's all part of this future of electrification and renewables. So she has a strong idea of where the government policy may be going in the future that may benefit Tesla. And finally, she actually did Apple calls, 100 again at the strike price of 100. We take a look in December. So instead of paying 131, so 131 times 10,000, instead of paying 1.3 million, she will have paid roughly 400,000 for this call. Now, 400,000 is a lot cheaper than the 1.3 million. You're saving 900,000, and if you're bullish for the stock, if you think the stock is going to go up, which, you know, Apple over the history has done pretty well. It went up 70% last year, is already up 3% this year. Over the 6 months, 24%. So 5 years, it's gone up 400%. So Apple has performed really well. Again, it's moving to more of a software subscription service or services like Apple TV, fitness, all those things. The trajectory of the monthly revenue is obviously going up. And with the quarantine still happening, people will want fitness products and more entertainment products and things like that. And we're currently through a new super cycle on the Apple devices. The M1 chips are coming out for the laptops and for the Mac Mini, and obviously the iMac is going to get refreshed as well. I'm very bullish on Apple. Actually, I own a lot of these stocks. I own Disney stocks, Tesla stocks, and Apple. The only thing that I don't have is this AB, and I had no idea they existed. It isn't really brand name that most people would know about. If you've got any information on this, please write a comment in the comments below. I'll be interested if anyone's done any research on it. She, like many people, think Apple stock is going up. So if it went up 70%, what's its price right now? So it's 136 times 1.7. You know, 230 it's suggesting. If it does go up 70%, from the initial investment of $400,000, you see that you would get an extra $800,000 back. So you get 1.2 million by the end of the contract. If it does the same thing it's done last year. If it does less than that, let's say 150, you're still getting a 32% return. Now that's better than any bank account. So she's employed these call strategies which are called leaps. Nancy Pelosi has used these options, so she's bought calls for a significant discount than actually buying the shares themselves, but she's bought it in the money, which means that the cost is a little higher because of the intrinsic value. but it's also giving you a buffer for this stock price to go down and you not losing so much of your initial investment. But if it goes on the upside, your earning potential is leveraged because each one contract is the equivalent of 100 shares. And if the stock price goes up by $1, you can earn any fraction of that dollar, and depending on the option that you bought, it could be anywhere as high as like 99 cents per dollar. So if the share price goes up by $1, you'll get 99 cents, or maybe 40 cents, or maybe 30 cents. And it really depends on where you buy the stock in the money. And you can see that in the Greeks when you buy options. The delta amount is how much the stock price goes up and how that affects the price of your contract. Now, buying basic shares is one way of investing. The other way is to use LEAPs, these long-term equity anticipation securities. In other words, you're anticipating that the price of the stock is going to go up, and without spending the money on the underlying stock, you can deploy your assets in a call option. So I'd say she spent about $2.2 million on probably $4 million worth of shares and getting it at that discount while still being bullish and hoping for those prices to go up in the future and still benefiting from that. So as the price increases, so does the value of the call contract. Now, I'm not here to judge anybody based on anyone's political affiliation or anything like that, but as you can see, Nancy Pelosi has got a lot of money and she is deploying a significant amount of money, at least 2.2 million, just on the back of the handkerchief here. Now she's deploying about $2.2 million worth of assets. Now, when you buy options, some people would say that you should only be playing around with options with 5% of your portfolio. So it looks like she probably has 100 million. Now, I googled her net worth and it looks like it's anywhere between tens of millions to hundreds of millions. Now, if it was tens of millions, I don't know if you would be playing these call options as liberally as this. Whereas, like, if it was about 5% of your portfolio, then maybe you would, because you'd have your assets in other long-term investments, whether if that's like real estate or whether if it's in some other mutual funds or bonds or things like that. All I know is she's got a significant amount of money, and this is what people do who have significant amounts of money. They have diversified their portfolio by buying options in these companies that people are rooting for, like Apple, Tesla, the Walt Disney Company, and things like that. Now, I'm long on all of those companies, and I want to see them do good in the future as well. But it's interesting that they choose to use call options rather than buying the underlying share. And there may be something that we can learn from that, is to learn how to leverage our cash instead of just buying shares directly. We can actually earn a lot more by buying in the money calls over a long period of time, which is that leap, which allows you to take profits. Say if it goes up 30%, maybe you want to take your profits then, or even if you want to have diamond hands and hold it through till 2021, where you potentially could have earned anywhere between 50 to 100 to 200% of your initial investment. That is leveraging a small amount of cash, yet still be bullish on the underlying stock. That return after that 1 year can be deployed into buying actual stocks in other things, like maybe it's more into this AB or something like that. Now, I haven't done any leaps myself, but it seems like this is what people do who have money. So I've been actually looking at leaps in different stocks myself. Some are growth stocks, it's more riskier, but judging by the growth of the particular industry that I'm looking at, it looks like that it could be a sure bet and I could have ample return without actually buying the underlying stock for the same price but not get as much appreciation, but I can get a more leveraged depreciation if I buy the calls, because remember, every contract is worth 100 shares, and if 100 shares at 60 cents, let's say, per $1 price increase, that's quite a lot of money for that price shift. So what do you think? Do you think Nancy Pelosi did some smart things here? What do you think about politicians and their trading habits? Are you happy that their information is publicly available so you can see what they're doing? Have you done leaps yourself? Please let me know in the comments below on your thoughts on this topic. Let's keep it civil, and I'll see you next time. Hey, before you go, if you found this interesting, please give this video a like and please share it with your friends. Also subscribe and hit the notification bell so that you can see my latest videos as and when they go live. Now, if you're new to investing, check out the links in my bio with all the free shares and free money when you open up these accounts. There's lots of different accounts and I use all of them for different reasons. So check out the offers that are available and you could get some free cash. If you use my link, I get a kickback too, so it really helps out the channel. Thank you for watching and I'll see you next time.